What up, guys? Welcome back to the channel. My name is Huey and I trade stocks and options every single day, even on weekends. In today's video, I want to talk about another crucial topic that you will need to understand when you're first getting started. And that topic is price action. In this video, we'll talk about uptrends, downtrends, pullbacks and reversals, and how the video games of the 90s put us on game before we even knew it. Along with volume, price action is one of the keys to making money in the market. Forget every indicator you know. If you can identify what direction price is going, you'll know how to make money in the market. Video games also taught us how to be patient, use strategy, and know when it's time to level up. All things that carry over to your experience in the market. I might be reaching a bit here, but tap in with me so we can simplify these patterns and know where we're at in the market at all times. Alright, let's get into the video. Alright, so just like Super Mario, whenever he has his wings on, price moves up and it comes down little by little, but it continues to work its way up, right? It pulls back, but it continues to work its way up, right? And let's say you finished your mission up here and now you got to work your way back down. Price comes down, right? Mario doesn't come straight down. He works his way down little by little, unless he falls through a hole or through a pipe or something. Another way that Mario moves that's unknown to many people is he kind of moves sideways sometimes. And this is kind of how I feel while I'm at work sometimes, and I'd rather be home trading full time, right? But that's neither here nor there. Price kind of moves sideways. So now I'm gonna label these real quick with the colors to show you who's in control during this time, right? And this is actually very convenient because these are the colors of the Italian flag, and according to the game, Mario and Luigi are Italian plumbers, so I think that's pretty interesting. All right, so during this time there's an imbalance in the market to the buy side, and all that means is buyers are in control. During this time there's an imbalance in the market to the sell side, and all that means is that sellers are in control. During this time there's a balance in the market where neither buyers nor sellers are in control. They both agree on a price, right? So buyers are like, all right, cool, we can agree on a price as long as you don't let the price get below this level, right? And sellers are like, fine, as long as you don't let the price get above this level, then I think that we can agree on the price, right? So during this very small period of time, buyers and sellers are shaking hands and saying, you know, and look at it, it goes kind of up and down like a handshake, right? They're in agreement and saying we can just keep the price here temporarily until one of us regains control. So during this move, buyers are in control. Here they agreed, and then sellers stepped in and took control. There's a dude named Gerald Peters on YouTube, and he talks about the 4 stages of price. And there's been plenty of books and stuff published prior to this, but he breaks it down really clearly. So this is stage 1, where price is moving up. This is stage 2, where price is going sideways. And then stage 3, where price is moving down. And stage 4 would just be pretty much this same thing, but it would be down here. It would be down here pretty much, right? So those are the 4 stages of price. So let's look at some real world examples. I have one of my favorite tickers here, US Steel. Ticker symbol is X. Shout out to X because we hit it all week, and we made a lot of money on X this week. So this is X on a monthly chart, which means that every candlestick took a month of time to form. And during this time, X was in a very clear downtrend, forming lower highs and lower lows, right? And then it kind of formed a box over here, right? Where price kind of consolidated and went sideways for a bit until it looks like buyers stepped in and took control and gave it a direction, right? So we had our higher lows and higher highs out of this box until we got to this area where we formed, again, choppy kind of sideways price action. Now, the difference between these 2 boxes is that during this box, we changed direction. We went from a downtrend into the box into an uptrend, but during this box we went from an uptrend, you know, into the box, and then we continued to move up. We continued to break to the upside. We didn't change directions the way that we did in the past. So that's X on the monthly. Let's look at some other examples. Let's look at examples that are very clear to the downside and upside. So let's look at PGC on a daily. So this PGC on a daily. So I'm gonna go ahead, you know, for some, as a visual aid, I'm gonna go ahead and draw the channel. I'm gonna let these ambulances pass too, because they're just fucking shit is noisy. Okay, so I drew this channel just as a visual aid, and I'll go ahead and draw the higher highs and higher lows. So we started down here, and we've been kind of working our way up, forming higher highs and higher lows throughout the time that PGC has been trading, right? The time that I have on my screen, right? So I'm gonna go ahead and just draw the last one there. It might not go in that direction. It probably won't, but whatever. So we have clear higher highs and higher lows with buyers in control of the price of PGC during this time. Even though we have these pullbacks where sellers take control, buyers step in at areas that are higher than where they previously stepped in, confirming that uptrend. Let's look at an example to the downside. This is FLXS, looks like a steel company. And as you can see, price started way up here and it worked its way down to down here. Again, I'm going to draw the channel as a visual aid. But the more charts that you see, the clearer it looks to you, right? And all you really got to do is just look at, hey, where did price start and where is price at now? And if price is below where it started, then that means that we're probably in a downtrend. And if price is higher than it started, then that means that we're probably in an uptrend. So let me just change the color of this. So PGC is in a clear downtrend. Price was up here and we formed lower highs and lower lows throughout this whole time. And now we're kind of down here, right? Now, this is a pretty good example to bring up, because if you look at PGC now, or sorry, FLXS now, then you'll see that it started to form a higher low, right? We pulled back and this low is higher than this low. So we have a potential to try to go back to the top of this channel. Maybe continue that small little uptrend before we get to the top of the channel, and maybe reject based on the history of what this thing has done. And I mean, obviously, as you can see, during this time here, it formed higher highs and higher lows in this small, you know, within this small downtrend. It forms higher highs and higher lows as it pulls back within the overall downtrend, right? So small uptrends are pullbacks within the overall downtrend, and small downtrends in a pullback are just pullbacks to an overall uptrend, right? Let's look for an example where price went sideways. Okay, this is a good example. I mean, obviously price started way up here and is all the way down here now, so we would call it would probably be a downtrend, but I just want to focus on this area here where price has been for the past looks like 8 months, where we've been trading within this area where we can't break above this high and below this low, right? So buyers and sellers, you know, buyers said, I don't care what price is as long as it doesn't get below this level. And sellers are like, all right, cool, as long as it doesn't get above this level, then we can agree on that. So it's been consolidating, right? It's been in this consolidation, trading sideways. Now, again, I just want to state that even during this kind of consolidated price action, choppy sideways movement, we still have small times where buyers are in control and the price is in an uptrend, right? Such as that. And we have times where we form lower highs and lower lows, such as this, where sellers are in control, forming a clear downtrend, even within choppy, consolidated sideways price action. So, you know, I wouldn't recommend for newbies to try to play this channels, because you can really get killed with some of the sideways days, like this time over here where we just kind of went sideways a bunch. Your premiums can really get killed. So it's probably safer to play in times of clear uptrend such as this, or clear downtrend such as this, right? Very clearly defined and stated moves. So let's look at the SPX. Now SPX is S&P 500. SPX is the ticker symbol. Let's look at the monthly. So this is the overall market, right? Now if we so every candlestick here is 1 month worth of time. So if we look from where price was down here to where price is at today, we can see that we're in a clear uptrend. I just drew the channel again as a visual aid, but you can see that we're in a clear uptrend. Price is continuously moving up, and although it pulls back, it's making higher highs and higher lows, right? So when you zoom all the way out and you look at the SPX or the overall market, then you can see that price is just going up. Now let's look at the daily chart. This is a great example because this contains a few of the ways that price moves. So coming into the year, buyers were in control, right? Because price started way down here and it worked its way up to up here, right? So this is where we are now. At the beginning of the year, buyers and sellers, there was a balance in the market where buyers and sellers agreed on what the price should be. And so that's why you get this kind of sideways choppy consolidated move, an area of balance. And then immediately out of that area of balance, there was an imbalance to the sell side where sellers took control of the price and said, we're going to bring this price down. Right? Sellers are clearly in control as we're forming higher highs and higher lows. Sellers are clearly in control as we're forming lower highs and lower lows, right? Now, I do want to mention that there's some times where price was consolidated and buyers and sellers were in agreement, but sellers immediately regained control both times. Even during this time where it pulled back a bit, we still weren't able to form higher lows, higher highs. So sellers were clearly in control. Now we're here where we formed this lower low and a lower high, but now we have our first higher low, right? And even this low here is higher than this low, right? But I'm just gonna call this all one area. And now we came up from there to form a higher high, our first higher high, and then our next higher low, right? So we had a clear downtrend where we were forming lower highs and lower lows. We still had our first lower high. We still had lower highs, but we formed our first higher low here, this area here. And now we have our first higher high here and our next set of higher lows here. So this is price moving down, price potentially moving up, right? And reversing. And then we have the choppy sideways consolidated moves. Now, let's go back to the other examples. So like PGC, though it's in a clear uptrend, it does pull back. We do have pullbacks. And now these pullbacks aren't reversals because they're not breaking the lows. Right, they're not breaking these lows. The lows continue to get higher. Same thing with FLXS. Same thing with FLXS. We do pull back, but we don't end up breaking these highs. We're not making higher highs. We're continuously making lower highs. So although we're pulling back, we're not reversing. So it's very clear that you understand the distinction between a reversal and a pullback, right? Now looking at the SPX, we were in a clear downtrend, forming lower highs and lower lows this whole time until we first created our first higher low here, this area here where we have a higher low than previous low. And now we have our first higher high, right? The highs previous and higher than the previous highs. And we have our second higher low. So there's a potential for a change in trend here to the upside, right? Going from a downtrend to an uptrend, potentially. But has it happened on the weekly yet? Not really. Has it happened on the monthly yet? On the monthly, we're still in an uptrend, so it doesn't matter, right? So, just keep that in mind. We have pullbacks, and pullbacks are not reversals until they are reversals, right? Until they start forming higher, until they break the pattern, essentially. And I'll go ahead and draw a channel here so you can kind of see it a little bit more clearly, right? right? This was a very clear downtrend until we kind of formed this higher low here, and then we broke out of the trend and we started forming higher highs higher than this and this, right? Now we got to take out these highs here, and then I can say we're safely back in an uptrend. So I compare looking at the stock market sometimes as a video game, right? Because during the time you're playing a video game, you're exploring a lot about yourself, right? So this is what it looks like when you see the fire setup and the fire entry, but you missed it and you just gotta let it go, right? Bye. This is what it looks like when you are doing your DD on a play, and you know, the play doesn't check off quite all of your boxes, but you still jump in. And since you were impatient and didn't wait for it to check all your boxes, you took a small L. When you are in a play, maybe you catch a sector right as it's rotating and it's low volume, it's an uncrowded trade and nobody's talking about it. And by the time they do start talking about it online and throughout social media, you already have your runners are up like 450%. And this is what it feels like when you take that final profit. So this is what it feels like when you're trading and you're doing your best to ignore everybody else, right? Everyone's saying that Tesla's running, Apple's running, oil is running, or whatever the case is. And this is what it feels like when you stick to your plan, ignore everybody else in the community, ignore social media, and stick to your plan, whatever you planned, and bear the fruits of your work, right? This is what it feels like. I think we're all guilty of this, by the way. This is what it feels like when you are up big and you set a target of 50% and you try to let that 50% go to 100, but then you missed out on taking profits altogether. This is what it feels like when you think that you need 100%, but you settle for 50, and that's just fine. And this is what an entire day worth of day trading feels like, especially in that choppy market, right? You take your bumps and bruises, you win some here, you lose some here, and it's pretty much an all-day battle, right? Even towards the end, you're on that last 0-day play, and you end up the day with green. That's what it feels like. This is you entering your trading journal and your portfolio thanking you for bringing home the money and for ending the day green. Oh, so before I forget, I just wanted to mention that as of April 2022, Gold Rush Gang is officially 1 year in business. So shout out to the gang. And to celebrate that, we are opening up the floodgates. We will open up the server to everyone for absolutely free. If you want to leave your lame ass community and come to a crew that really makes money, then pull up on us. And as you can see, seasonality is one of the highest in April, actually the highest of all year. So this is the best time to make money. So pull up on us. We'll also be hosting a small account challenge where we're turning $500 into whatever amount of money that you want. It really depends on how much discipline you got, right? So pull up on us and tap in. You'll see the link below in the bio. All right, peace, guys.